lines, and we don't want to keep people any longer than is necessary. My name is Nena Moy, and I will be your host for today. I will be joined by two moderators, Mrs. Diana Okine, who is Head of Marketing and Public Relations at the Ghana Stock Exchange, and my colleague Edmond, who sits in our asset management business as a portfolio manager. On behalf of Chapel Hill Denham, I'd like to welcome you to the first in a series of webinars that we will be organizing. At Chapel Hill Denham, we are very intentional about creating impact through the work that we do as investment banking professionals. And our work cuts across infrastructure funding, real estate, SMEs, financial inclusion, healthcare, and education. Our primary focus for today's conversation is looking at opportunities in the capital market for driving economic growth in Ghana. And we've put together an interesting bench of panelists who will make this discussion worthwhile. As we're all aware, efficient capital markets play a critical role in the much needed funding requirements of any developing country. This is why this conversation is very timely, and it makes it increasingly important for conversations like this to be had. It just brings a sense of urgency to the work that we need to do in ensuring that we move the needle. Right now, I will quickly jump into a bit of housekeeping so that we can get on with the program. We will start off with one panelist presentation, which will last for about 5 minutes, and then 3 other presentations, which will go on for 10 minutes. Our panelists will be introduced by our moderator, Mrs. Okine, very shortly. Right after our presentations, we will go into the panelist discussions, which will last about 15 minutes, and then we would open the floor for questions from the audience. You can type in any questions at any point in time during the call, because presentations will come up early, and just in case you feel like you may forget those questions, please feel free to use the Q&A chat box to put in the questions, and we will answer them. If you have a preferred questions to the panelists, we deem fit for that purpose. At this point, I would like to invite the head of business for Chapel Hill Denham, Mr. William Olowojoba, to present to some and introduce to others Chapel Hill Denham. William, you have the floor.
Thank you very much, Nena. Good afternoon, everyone. Thank you for joining this webinar. I'll just take us through a little story about our company, Chapel Hill Denham. Chapel Hill Denham is a 25-year-old company which has footprints in Lagos, in Accra, in Abuja, and in London and then Dubai. We are into investment banking, like my colleague has said, and then we do investment management. Currently, our AUM stands at about $247 million. And then over the last 10 years, we've been able to support businesses and then do transactions worth over $150 billion US. Currently in Ghana, we rank number 4 in terms of securities trading brokerage in the Ghanaian market. And then our focus as a business is in the area. We have about 6 different things where we are focused on as a business. The first being everything we do is around environmental, social, and then governmental impact. The funds we raise and then where we put the funds around all these areas. Then the second thing, next slide please. Second thing is we unlock domestic capital markets to be able to release funds for projects and clients who are in need of financing. What we mean that we do is that we believe that we can raise local currency to finance our projects within wherever we find ourselves and whichever clients that we are working with. Then thirdly, we're able to create capital market structures. We know there are various investors even outside the localities where we operate, and then they look to be able to invest in all these markets. So we're able to create structures that will allow these people to be able to feel comfortable and invest around this market. Another thing we do is to create opportunities. We are particular about women, women-led businesses. In fact, we have a fund in our Lagos office, the Women Investment Fund, which principally invests in projects and in businesses that are led by women. We're also concerned about youth in their businesses that have been led by youth, and then we also create opportunities, we create capacity for such people. Another thing which is critical for us as a business is in the area of reducing carbon footprint in Africa and in every place, in every transactions that we do, particularly for any project that we're involved with. The last thing we do, which we focus on as a business, is creating jobs. And part of what the impact we have been able to achieve is like in our Nigerian, in the Nigerian space, over the last year, we're able to create for the transactions that we're involved with. We've been able to support employment over 513 direct jobs. So if on the right side of the slide before, you see some of the things that we have, the impact we've had as a company. This is speaks to what we have done in the headquarter company, but these are things that we hopefully will replicate in other markets as we go along the line. So this slide just shows some of the parties and the people that we have worked with. I will not bore us with all these names, but we can see some names that we are familiar with. There's the IFC, there's the AFC that we have worked with. In Ghana office, we've worked with the Ghana Stock Exchange. We've worked with the Ghana Securities and Exchange Commission. We are working with, we've done something with the Access Bank, and then we're doing something with the Nigerian, the NCC. We have some relationship with Ghana Highways and then the Volta River Authority. So for the rest of this webinar, I'm sure we'll hear a little bit about other things that we have as ideas that we want to bring to this market. Thank you very much. I would like to invite, I'll hand over the
Thank
meeting.
you very much, Williams, for that very Okay, thank you very much, Williams, for that brief and concise presentation on Chapel Hill Denham. At this point, I'd like to invite Mrs. Okine, who is one of our moderators for today, to go ahead with our panelists' introductions, and then we move on to their presentations.
Hello, can you hear me?
Yeah. Please go ahead.
Yes, good afternoon, ladies and gentlemen, and welcome once again to this webinar. As Nena said, the general objective of this afternoon's session is to emphasize the urgency and importance of the role of an efficient capital market in sustaining economic growth in Ghana. One of the key priorities of the administration of the President, Nana Addo Dankwa Akufo-Addo, is making Ghana Beyond Aid a reality. Consequently, some of the principal questions that we as capital market operators urgently need to address include: how can the capital market contribute towards this goal of our president? How can the private sector also contribute? What is the government's role in creating an enabling environment? And what are the key constraints, and how can we identify the quick wins, among other questions? We also intend to explore opportunities for incorporating innovation, particularly in the light of technology advancement that COVID-19 presents, and the ways in which businesses are rapidly changing. To help us address some of these questions, we have on our panel today, Mrs. Elsie Addo Awaji, who is the second Deputy Governor of the Bank of Ghana. Prior to her appointment as Deputy Governor, she was Senior Counsel of the Financial and Fiscal Law Unit of the International Monetary Fund, IMF, IMF's legal department based in Washington, D.C. She also served as a two-term Commissioner of Ghana Securities and Exchange Commission She is passionate about strengthening governance and institutions to support equitable and inclusive socioeconomic development. Mrs. Awadzi has been involved in the development of the capital markets in various capacities since its establishment. Unfortunately, Ms. Awadzi is running a bit late. We will introduce her again and welcome her to the panel when she gets in. In fact, she hasn't mentioned to us that she'll be a little late. Next, we have Mr. Ekowa Fezi, who has over 29 years in equity and debt capital markets. He joined the Ghana Stock Exchange in 1990 when it was established and has served as the head of marketing, research and systems and general manager before becoming the deputy managing director of the exchange and a member of its council in 2009. He was appointed managing director of the Ghana Stock Exchange on 1st January 2020. Mr. Fezi serves on various boards, including the Ghana Fixed Income Market, the Ghana Alternative Market, the Securities, Central Securities Depository, and then the Ghana Investment and Securities Institute. Mr. Fezi is also welcome. He's also will be joining. We also have on our panel today, Mr. Phil Southwell. Phil has over 25 years of experience in investment banking and principal investing with Deutsche Bank and Bank of America Merrill Lynch, mostly focused on emerging markets in Asia, Middle East, Central Europe, UK, and also in Africa, where he had been operating continuously since 1998. Phil is a partner at Chapel Hill Denham and the chairman of the Nigerian Infrastructure Debt Fund. Phil, you're most welcome. Finally, Mr. Williams Olowo Juba. Williams is the business head of Chapel. We had him speak not too long ago. Williams is the business head of Chapel Hill Denham, Ghana. He has over 17 years experience as an investment banker in divestitures, mergers and acquisitions, and securities trading. He has achieved success in a variety of roles in Ghana and Nigeria with increasing levels of responsibility in especially creating customized financial solutions to meet clients' needs. He's licensed as a fund management representative by the Securities and Exchange Commission. So I'd like to welcome Mrs. Awadzi in absentia and gentlemen Phil, Echo, and Williams to this afternoon session. As Nina mentioned from the beginning, we'll start with a 10-minute presentation by the panelists, and we'll invite Mr. Phil Southwell to kickstart the presentation for us. So Phil, please, hand over to you.
Thank you so much, Diana. And thank you, Williams, Nena, for organizing this event. And it's a real pleasure to be with you all today. I will speak for 10 minutes, no more, I promise. And I just wanted to give a perspective on, the capital markets sort of generally, and then the capital markets specifically in Ghana, and some of the challenges that I think we collectively face. I don't know who's running the slides, but you've just turned the slide over, so that's fantastic. Thank you so much. From a capital market standpoint, I think most banks or most companies who are listed on capital markets, view the capital market as being somewhere to raise debt, raise equity, to create liquidity for its investors, pay interest or dividends to those investors. You can manage your treasury stock, buyback. You can do all of these simple functions as a bank or a company. I think the role, though, of capital markets is really much broader than that. And I think it's that breadth that is important for today's discussion, particularly because the Ghana Stock Exchange and Bank of Ghana are representing alongside me on this panel. Because I think the Bank of Ghana and the Stock Exchange, collectively have a huge impact in terms of the ability and the speed with which Ghana can continue to develop. Because through the capital markets, one has a relatively high degree of influence in terms of governance, in terms of enforcement, in terms of liquidity, in terms of developing the investor base. And I think these areas of capital markets development are crucially important in terms of the development of any country, Ghana specifically. No government in Africa is able to finance all development all by itself. And so what is incredibly important is to use capital market structures to crowd in institutional and other capital so that we're then able to finance the developments that we need. And I think nowhere is that more true than in the context of infrastructure. And if we can just go to the next slide, please. To an extent, Williams has stolen my thunder on this. But I think infrastructure is at the heart, is the cornerstone to development and growth. There are lots of measures of this, but one can see from the development of China over the last 30, 40 years that only if infrastructure investment increases by 15 to 20% a year, can you achieve 10% GDP growth on a successive basis. And so when we think of infrastructure, we're thinking about how to invest in infrastructure in power, energy, transport, broadband, social infrastructure. We're thinking about sectors like SMEs or agriculture, healthcare, education, manufacturing, and so forth. And we're thinking of jobs. And on the page presented here, we're looking at infrastructure generally, but then more specifically at SMEs, healthcare, education, affordable housing. And I think at the moment, to an extent, we're sort of scraping the surface from a capital market standpoint in terms of how much can be financed, how much infrastructure can be financed by the capital markets. And I think changing that is one of the key challenges that we all face, and something that we're very keen to support as best we can. In the following page, I take a quick snapshot in terms of capital markets in Ghana today. And on the left-hand side of this page, I look at equity markets. On the right-hand side, the debt markets. So I'll start on the left with equity. What we have today is one security that represents 3/4 of all volume, which is MTN Ghana. And so consequently, I've had to highlight the bottom left of that chart to show the liquidity and the size of the cedi free float in each of those companies. And what one obviously finds is that there's a high degree of correlation between liquidity and the size of the cedi free float. Intuitively, that's what you would expect, and it's what you see. But we have at the moment really just one a security that has any form of meaningful liquidity. On the right-hand side of this page, we look at the size of the debt market. So it's roughly about $17.8 billion worth of domestic currency treasuries and about $1.6 billion worth of corporate bonds. And I think what's interesting is really just how small the corporate bond sector is in Ghana. And I think one of the key challenges for the capital market generally is to find ways of allowing companies and banks to access long-term capital through the capital markets. And I say that not because I don't like banks. I've worked in banks all my life, so that is not the case. But because the capital markets can do things that banks can't do. They can provide much longer dated tenor. They can provide different types of amortization type schedules. And often they can provide a lower cost, particularly with those longer tenors, because banks, through the way they're regulated, have capital charges based on that tenor. So in the next couple of slides that I talk about, I will come back to this sort of theme around doing something with the development of the corporate bond market. The next slide addresses three key themes that I think investors seek anywhere in the world. I think there are lots of corporate governance guidelines that one can use and so forth. But I really think there are three things that investors seek. I think investors seek detailed, timely financial reporting. And that obviously is critical. Secondly, they want full disclosure on related party transactions and would be very happy if there are no related party transactions. And thirdly, they want minority interests protected, because by and large, most institutional or retail investors are minority interests. So they want their interests protected. And if one can achieve those three things, then there is much greater appetite for those markets, and that can support liquidity and whatnot. In the chart I show on the left, I just pick on one thing, which is financial transparency. And I take the top 20 stocks in Ghana and I map on the y-axis when they reported the 2019 numbers during the course of this year. And I think Republic Bank and MTN Ghana were the first out of the block on the 23rd or 24th of February. So we're now sort of talking 7 weeks into the new calendar year. In contrast, I've put in two well-known brand names. I've put in JP Morgan and BlackRock. So JP Morgan beat BlackRock on a financial reporting perspective by 1 day. And even though they operate in 103 countries globally, in probably 50 different currencies, have huge numbers of staff, they are able to report their 2019 numbers on the 14th of January. BlackRock, with $4.5 trillion worth of assets under management, are able to do this on the 15th of January. I'm not suggesting by any means that every company in Ghana or Africa needs to match or beat JP Morgan or BlackRock. But I think quick, timely communication of financials is really, really important. And in other markets, you would expect a more rapid timetable. Thank you. In order to develop capital markets, I think it's important that government and state institutions take the lead. And on this page, I've listed out the major companies that are owned by the Ministry of Finance. And it's a couple of years old, but from the annual report and accounts for SNIT, I've listed all of the unlisted companies that they are invested in. I will not and won't suggest that all those companies should be privatized and equity should be sold on the Ghana Stock Exchange. That is not the suggestion or proposal I have. But I do think And I know there are one or two that are listed already. But I do think every company listed on this page should probably be asked to list local currency debt on the exchange. Because that listing process, it's like sort of coming out. You know, this requires a fair amount of disclosure of the underlying financials of these companies. And it also commits those companies to ongoing transparency on a quarter by quarter, half year by half year, and 12-month by 12-month basis. And that discipline that the capital markets imposes ultimately is good for businesses. That culture, I think, is a very, very good one. And I think, you know, if you're a private equity house or you own a business, it is very, very normal to list debt in that business first before you even think about listing equity further down the track. So I think in order to create a much deeper, more liquid, more developed corporate bond market in Ghana, one needs to see state-owned, Ministry of Finance, SNIT-controlled companies being asked to go list their debt on the local market and to create a much stronger corporate yield curve than we have today. So I do think that's important. Next slide, please. One of the things that I think is interesting is that if one looks at the asset allocation of pension funds in Ghana today, or anywhere in Africa, and one compares that to the allocations that one sees across the average OECD pension fund, there are a couple of things that sort of jump out, I think, from the page. The first is that, you know, equities and collective investment schemes and alternative type assets actually, you know, represents nearly half of the allocation. And, you know, that is clearly not the case. One doesn't have the ability to do that in Ghana today. Also, that the bulk of the investments that are made are actually in listed investments or cash. So 85% of the allocation is in listed investments or cash. And I think, you know, in particular, there are, there are routes that can be used to create diversification, like collective investment schemes. But also there are investment themes that investors are looking for, like ESG themes or green investments or Sharia investments or other faith-based type investment strategies. All of these can be delivered from a market standpoint. And I think they become much more robust strategies by virtue of being listed. And then the final slide I'll talk to is one of packaging. And what I mean by packaging is that if one takes a single asset or a single project and asks an institutional investor to invest in it, I think the universe of investors narrows really quite substantially. I think very few institutional investors have the ability to evaluate the strengths, weaknesses, opportunities, threats of a single project in one part of Ghana. If you collect a number of projects, if you put a dozen projects together and you then ask the same institutional investor to take a look at that diversified package of projects, the demand, I think, is much easier to generate. And I'll leave sort of two data points with you. Internationally, there's about $100 trillion worth of assets that are under management. 2.7 trillion of those assets sit in diversified infrastructure listed infrastructure investments. A further 1.6 trillion sit in listed real estate investment trusts. So, just taking one simple diversified product, is $4.3 trillion worth of global listed assets. I think we need to find ways of promoting collective investment schemes in Ghana, allowing pension funds and other investors to better diversify. And that is what my partners and colleagues at Chapel Hill Denham have been seeking to do elsewhere in West Africa and elsewhere across the continent. At that point, I'd like to hand it back to you, Diana.
Thank you very much, Phil. Thank you so much. We spent just about 2 or 3 minutes above your 10 minutes, but it was worth it. Thank you. Ladies and gentlemen, I would like to inform you that Mrs. Elsie Awaji has joined us, thankfully. And so, Madam, we would like to welcome you to this afternoon's session formally. As we have welcomed you, we hand over the mic to you to give us your 10 minutes presentation. Mrs. Awaji, you have the floor. Hello.
Okay. Thank you, Dinah. Can everyone hear me? Okay.
Yes.
Yeah. So very good afternoon to my fellow panelists, as well as all the distinguished participants. Is my presentation going to be shared? I did send it to the team at Chapel Hill. Is it going to be shared on your side? Excellent, thank you. So very good afternoon again, my fellow panelists, as well as all the distinguished participants. And let me say a big thank you to Chapel Hill Denham for this honor. A special thanks goes to William and Nana and all of the rest of them at Chapel Hill. I deem it a great honor to be invited to this very important discussion. So on that note, since I have only 10 minutes, I'll dive right into my presentation. Next slide, please. So I wanted to start this discussion off by just putting this in context. Basically, the global economy is greatly impacted by the pandemic. We all know that. It's being called, the West, if you will, depression since the Great Depression. And this has implications for global financial markets and access thereto. We have seen investors around the world, in particular those invested in emerging market assets, sell off. That has eased off a little bit in recent months, but we saw that in Q1, there was massive sell-offs, creating problems for emerging market currencies. Governments and central banks around the world have implemented unprecedented fiscal and monetary policy measures to stem the tide of economic decline. But the outlook still remains unclear. Next slide, please. So on the Ghanaian economy as well, we have taken a hit, and the growth projection currently is at 0.9% compared to the initial projection of 6.8%. Recovery to pre-COVID levels is expected over 2 to 3 years. The Ghana Statistical Service, as of May and June, had indicated that the pandemic had really affected the private sector on account of demand and supply shocks. And so we saw that about 35.7% of the firms they surveyed had to remain, had closed during the lockdown, because of government directive. But more importantly, that even after the lockdown was lifted, 16% roughly of these firms remain closed. Some of these may never recover unless something is done. But this just goes to point to the fact that many businesses have been impacted by this pandemic. Jobs have been impacted, wages have been impacted, and really that's the story. It gets worse when you go to the next slide that I'll be talking about shortly, where I think it's the next two slides. But when you look at the fact that the Ghanaian economy is predominantly informal, as well as made up of mostly micro and small businesses, it makes the impact even more dire. So the government responded with a number of economic policy measures, and then the central bank also announced a number of measures, critical among which were a 150 basis point rate cut in March, as well as purchase of government bonds to the tune of 10 billion Ghana cedis. We reduced the reserve requirement for banks and savings and loans, finance houses, microfinance companies, rural and community banks. We reduced a number of other regulatory limits, just so that banks and finance houses and these other smaller institutions could have a little bit more liquidity, as well as to be able to pass on this liquidity to their clients by way of forbearance in terms of loan service requirements and the like. Indeed, some banks have actually gone ahead to increase their lending to certain sectors of the economy, in particular the pharmaceuticals and a few other sectors that have been key in the fight against the pandemic. Next slide, please. So since we're talking about the financial sector in retrospect, the capital markets in retrospect, or more broadly, the financial sector in retrospect, I felt that I would do a quick stock take in terms of where we've come from and where we are. So I'd like to start from pre-independence, where you had mostly one or two foreign-controlled banks. These were, at the time, the Barclays and the Standard Chartered banks. And then the establishment of a number of state-owned banks, really, to drive the agenda of providing financial services across the country, and in particular, funding our developmental objectives. And so we saw the establishment of NIB and GCB and the ADB and the like. So by 1990, you had about 11 commercial banks, mostly state-owned. In the 1970s, we launched rural and community banks to provide funding, particularly for agricultural communities. Fast forward to the 80s and 90s, where we embarked on financial sector liberalization, and therefore we saw the establishment of a number of non-bank financial institutions, including discount houses, savings and loans companies, finance houses, leasing houses, even the stock exchange, whose initial legislation had been passed in the 70s but had never been established. And then we saw the unleashing of the securities industry as well by the establishment of the Securities and Exchange Commission and the subsequent licensing of broker-dealers, fund managers, collective investment schemes, and the like. And then fast forward to the mid-2000s and beyond, where there was seen that there was a need to really deepen the financial sector, and therefore we embarked on establishing a number of critical market infrastructure, including the Central Securities Depository, the Collateral Registry, the credit reporting regime, by which a number of credit bureaus were set up. And then more importantly, we repealed the exchange control regime, so that a lot of the restrictions that pertained even to investments on the stock exchange were removed. And then we saw the establishment of a private pensions industry, which was meant to really provide pools of long-term funding to support financial expansion in the economy. And then we saw the establishment of the Venture Capital Trust Fund as a catalyst for a private sector-led VC/PE market. We saw the phase out of discount houses as the interbank market took root. And then the Bank of Ghana began to license the microfinance industry to help provide financial access to those at the bottom of the pyramid, as it were. So this is the size of the financial sector. I won't spend too much time on this. This is where we are. Over the last 5-6 years, we have seen massive growth in financial sector assets, still very much led by the banking sector. The financial sector overall is quite small because it constitutes only 51% of GDP. In many markets, emerging markets, frontier markets, you could have the financial sector being as big as GDP or sometimes even more than GDP. You've seen this in some of the Eastern European countries and all of that. But our financial sector is still quite small, so 51% of GDP. Access to finance remains a problem. So we've seen massive growth in financial sector assets, but and then, like I said, all of these non-bank financial institutions and the securities market being available, but access to finance remains a challenge. Part of the reasons for this is what I alluded to earlier on. The MSME sector still dominates our private sector, and a lot of them remain informal, or even if they're not, they're one-man owned or family owned, and many of them have not wanted to have access to the capital market. The MSME finance gap remains at 13% of GDP, which is quite high. A lot of these businesses rely mostly on bank financing. This is something that I think Phil alluded to. And many of these businesses still do not really want to go to the market, and we need to continue to investigate that. Now, let me say that the banks can only do so much, and I totally agree with Phil when he says that. I mean, banks are banks and will be banks. And in countries that have been able to really expand access to finance for businesses, they have worked on the ecosystem to ensure that non-bank financing is a real option for businesses. Banks largely, in Ghana at least, fund their operations with very short-term deposits. And there's a few banks in Ghana and a few savings and loans companies have accessed the capital market through issuing medium-term notes and some bonds, but there's scope to increase that so that banks are able to provide more long-term funding. But I think we need to make a big push for corporates also to diversify away from bank funding, particularly for the medium to long-term projects. I wanted to note the fact that there is currently a financial sector development and inclusion strategy that is under the auspices of the Ministry of Finance. And the idea there is to be able to increase financial inclusion, including access to finance for corporates, small businesses in particular, from 58% to 85% by 2023. And a lot of this is expected to be on the back of increased access to electronic forms of finance, and in particular for micro businesses and small businesses, that they're able to leverage financial services on the back of their mobile phones. Next slide, please, Dinah. So I have attempted to say where we've come from and where we are, and I think more importantly, where we go from here. This goes without saying. We need a well-developed, deep, and efficient financial market to support robust economic recovery in Ghana, particularly out of COVID. And more needs to be done to deepen and broaden our financial market. We need to make bank and specialized deposit-taking financing, as well as NBFI financing, more accessible to businesses. And we are committed at Bank of Ghana to helping with the implementation of the Capital Market Master Plan to make that happen, so that we have a credible and efficient capital market that's accessible to all. We on our part will continue to pursue price stability, which is an essential component of a stable financial and a stable and efficient financial market. And we will also work towards promoting financial stability, as well as inclusive and sustainable finance. Among other things, we're working on operationalizing the GIMRA documentation so that our repo transactions effective October 2020 are able to provide more liquidity in the money market. We are also working together with the Ministry of Finance to review the primary dealership system in the government debt market, and this would hopefully help to strengthen that market as a base for corporate bonds and other forms of fixed income instruments to become more available on the market. We would ensure that the sustainable banking principles that were adopted by the banking sector in November last year will be fully implemented by the beginning of 2021. And this hopefully would create a new pool of perhaps green funding, green finance, sustainable finance, what others might call ESG type funding, which really has a place for the types of developmental challenges that we have in Ghana. And so we would really continue to work on making sure that this happens. And I wanted to add also that we would continue to work with other financial regulators in Ghana and the Ministry of Finance through the instrumentality of the Financial Stability Council, which brings together all these regulators and the Ministry of Finance to think through issues that affect the entire financial system, including some of the transparency issues that Phil mentioned in his presentation. So that would be all from me at this point, and I look forward to any questions that might ensue from here. Thank you.
Thank you very much, Madam Elsie. Ladies and gentlemen, at this point, I'd like you to make use of the Q&A chat box that we have. If you have any questions on Phil's presentation or Madam Elsie's presentation, kindly jot down your questions in there. We're actually expecting the Managing Director of the Stock Exchange to join us in a few minutes, but we're not going to wait for his presentation, so we'll delve straight into the queue, the questions for the panelists. And I'd like to start with you, Mrs. Awaji. So a number of reforms have been adopted to build a better, stronger, and more resilient financial systems. And in Ghana, focusing largely on the banking sector. With respect to the capital markets, are there any specific policy changes and stimulus being provided to improve activities? If there aren't any, are we to expect something soon, in your opinion?
Okay, thank you for that question, Dinah. So I believe I alluded to a number of measures that we have recently taken in the context of the pandemic, right, to provide more liquidity in the system. But let me start off by the reforms we have undertaken over the last 3 years. And I think those go really to the core of how one would think of improving the efficiency of the financial market, as well as restoring integrity in the market, which is also a point that Phil raised. Because the market is about investor confidence, investor trust. And the reforms we've carried out over the last 3 years have meant that we have weeded out financial institutions that had collapsed on account of bad behavior of shareholders and depositors, shareholders and directors and managers. And it actually, in some cases, also with the complicity of depositors, where you had depositors team up with some bank managers, for example, such that a large institution would bring deposits to a bank on the basis of how much they could get back from that bank, as a kickback. And that meant that that deposit was already compromised because it was not going to be fully used, right, to conduct good business. So we had to weed out the failed institutions. We had to send very strong signals to the market that integrity was key, and protection of client assets and protection of deposits were very key. And therefore, we created new rules around corporate governance. We created new rules around fit and proper persons who could either own controlling interest in banks or could govern or manage these institutions. And we created new rules around Basel II and III, as well as requiring banks to use IFRS 9 for their reporting, all of which we believe would create a more robust banking environment, which then would help to promote better standards in the entire financial system. So on the back of that, we entered the pandemic as a country with a much stronger banking system and somewhat strong specialized deposit institution sector, which is made up of the savings and loans companies, the microfinance companies, the rural and community banks. While we got the banks to recapitalize after the cleanup before the pandemic, we hadn't yet been able to get these smaller financial institutions to recapitalize. So in relative terms, they don't have the strong buffers that the banks have been able to build as a result of the recapitalization of the banking system. But definitely, even the smaller financial institutions are in a much better place than they were prior to the cleanup. And so this is the context, and what we've done over the last few months since our monetary policy decisions of March 2020 have been done to come up with a number of measures that would help to release a little more liquidity in the system, as well as to allow these financial institutions to pass on the benefits of these measures to their clients that have been worst hit by the pandemic. And so this is what it is. Going forward, what are we expecting? We're expecting that banks remain stable and resilient. We expect that the smaller financial institutions are able to recapitalize by the end of next year. And that would mean that they may be seeking access to the capital markets, for example, and we strongly encourage them to consolidate as much as possible. And we also expect that the banks and these smaller financial institutions are better able to support economic recovery and economic growth going forward. But we're very much aware, and we're very much committed to ensuring that the strong standards in terms of corporate governance in these institutions, including reporting and transparency, and including the fact that we expect them to take very seriously the trust that the public has reposed in them, so that we continue to have a strong financial system going forward.
Thank you, ma'am. I just want you to expatiate on one thing. You did mention that you expect the small deposit-taking institution and smaller banks to hopefully list on the stock exchange or come to the capital market. Is there any intention or on the side of the central bank to make it mandatory for them, for such small banks to go public and list, to improve the transparency and also help them to live up to, the kind of discipline that you expect them to practice?
Thank you very much. That's an extremely important question, Dinah, and it's a question that we have grappled with and we continue to grapple with. I will not preempt what our final decision would be, but we definitely are very supportive of any attempt by these institutions to access the capital markets for funding. It is something that we would require. We would hope that in the process, the capital market authority, regulatory authorities, including the Ghana Stock Exchange as a self-regulatory organization, would also be stronger in the enforcement actions, because we saw that even some of the banks that had failed had been listed on the Ghana Stock Exchange and had not been able to publish financial statements for years. Yet their stocks were were still trading. The trading had not been halted in their stocks, for example. So it's going to take an all-round effort, coordinated effort by all the regulators to be able to ensure good best practice standards being implemented across board. And so we will do the best that we can. Each institution would have to decide whether they access the market or not. We're not yet at a point where we've decided that it's going to be a requirement going forward. And even if that is the end game, even if that's the desired destination, it will take some time. And so there would need to be some hand-holding along the line before institutions get ready for the market. We're committed to helping along those lines. What I do know for sure is that we have no problems with banks and SDIs accessing the market, either for equity or debt, and we will continue to support that.
Okay. Thank you very much. Ladies and gentlemen, don't forget to put in your questions in the Q&A box. We will ask them as we go along. Phil, given your broad experience in capital markets across continents, what is your opinion, or what in your opinion are the necessary steps Ghana needs to take to actualize the vision of a Ghana Beyond Aid? Penny, for your thoughts.
Okay, thank you. Thanks, Dana. I think it's interesting looking at how OECD countries behave and finance themselves, and how countries, African countries, Ghana specifically, is able to do this. And I think a couple of points jump out at me. I think the first one is a currency point, which is, I don't think that it's by accident that every single G20 country finances its assets, its infrastructure in their own currency. And that is not the case across other countries across Africa, emerging markets, and Ghana specifically. And I think this currency point just has a huge impact in terms of the cost of infrastructure, and in terms of really mortgaging the future, because inflation rates are different, and so it's easy to predict that if one takes a CD versus the dollar, it's likely to devalue over time. Yes, it becomes a sort of mathematical certainty. And if you are financing infrastructure in someone else's currency, and your currency devalues, then the cost of that infrastructure just rises every year. And so some of the most expensive infrastructure that I've come across anywhere in the world actually sits in Africa, in some of the poorest countries across the world. And so I do think a currency is at the heart of this. Second point I would make is one around financial education and retail inclusion. And I suppose in particular, thinking about, what are the differences between savings and investments. And I think it's very easy for a retail investor in Accra to save with a bank. And banks, banks are not charitable institutions. So, banks' savings will not keep pace with inflation. So, your savings will devalue over time under that scenario. If there were more investment type products, preferably low risk, so investment type products that are focused on, corporate and, sovereign debt, or maybe sort of some of the lower risk asset classes like real estate and infrastructure. There is an ability to then grow that pool of retail investments. And there is lots of correlation between savings rates and GDP growth and so forth. And so we know from personal experience, as well as from a sort of macroeconomic perspective, that if we have the ability to invest in our own country, to see those investments grow, in particular grow above inflation, then that process, I think, is going to have a huge impact longer term across the country. When I was introduced right at the start, the sort of second part of my introduction was that I also chair something called the Nigeria Infrastructure Debt Fund in Nigeria. And the structure, or the NIDF as it's called, the Nigeria Infrastructure Debt Fund, it does something which is just standard practice across the OECD, which is to raise capital from retail and pension fund investors, and then to reinvest that, into safe, secure project finance loans within the country. It raises the money in its own currency, and it invests in its own currency. So the NIDF has raised Naira from retail and from pension funds. It lends Naira. Unlike a bank, we don't have to calculate risk-weighted assets, so we can lend for 7, 10, 12, 15, 20 years if we want to, and if the infrastructure project warrants it. So there's no tenor concern. And we're able to distribute 95% of income every quarter. Now, in 3 years, the NIDF has delivered 78% returns to investors. So significantly above inflation. That structure, that structure can be applied anywhere. NIDF is the first example of it being applied anywhere outside the OECD. It can be applied in Ghana. It can be applied in lots and lots of different markets. And it has a huge impact because it allows one to bring the currency of funding into your own currency, and so not take any FX risk. And it allows you to support much more infrastructure because you can take away all of this tenor risk that you would otherwise have if you were to finance it with rolling bank loans. So I use that as an example. But I think ultimately it's cultural, and your president and Ghana as a whole seems really focused in terms of developing the psyche of standing on your own feet and not looking for aid. What one needs to look for is investment from elsewhere, and the investment opportunities in Ghana are really, really exciting. I don't know if there's a follow-up question to that, Diana, but your screen has gone blank.
Hello. Can you hear me now?
Yes.
Yes, we can.
Yes. Thank you very much. Ladies and gentlemen, I just want to inform you that we've been joined by the Managing Director of the Ghana Stock Exchange, Mr. Ekowa Fezi, and in order for him not for us to allow him to rest, I'm going to shoot a question straight at him. So, Mr. Fezi, welcome. Can we see you?
Yes.
I'm there. You can hear me? Yeah.
Yes, we can hear you, and good to have you. We've had a series of insightful, two very insightful presentations from Madam Elsie Awaji and Phil Southwell from Chapel Hill. I'd like to find out, with your experience at the Ghana Stock Exchange, it is a known fact, or it's being said, that the capital markets in Ghana seems to be dominated by foreign and institutional investors. What key changes do you think should be made to increase retail participation in the market to broaden our investor base?
Thank you, Diana. I'm going to ask my own question and answer it before I answer yours. If you get it. The reason is that I need to give some background to our market. It's important. It's important that those listening and watching get to know what the exchange is all about. Ghana Stock Exchange has set up 3 markets, and it's important for everybody to know. We do have the main equity market, we have the alternative market, then we recently set up a bond market. For the equity market, we have 40 companies with a market cap of about 53 billion cedis. And for the bond market, we do have government bonds worth over 100 billion and corporates about 8 billion on this market. So we have 3 markets that we set up. All our operations are electronic. Everything is done electronically on this market, right from the trading to clearing, settlement and depository. When it comes to the past performance over the years, we have raised about 5.3 billion cedis worth of long-term capital to this market by way of equities. When it comes to the bonds, corporate bonds have done the 8 billion as I mentioned. So those are some of the things that we've done in terms of achievements. We've been able to facilitate the raising of capital in this country over the 30 years that will be in existence by way of equities and also bonds on this market. We've introduced professionalism in the industry. We've facilitated the development of the securities market. We now have broker dealers and dealers, custodians, etc. in this market. So on the whole, the exchange has done quite well in terms of its development and also contribution to this economy. Going forward, there are 2 key things I wanted to be doing, and that will lead to answering your question. One is that we want to make sure that Ghana Stock Exchange is the preferred platform or destination for investment and financing in Ghana. What I mean by that is that we'll provide an avenue for raising capital and at the same time also provide the liquidity. And we intend to do that using a lot of technology, digitization of all our operations, and also education, etc. So that is one key thing that we intend to do. And of course, increasing listings. And I heard Phil speak. The bond market is key for us for developmental issues when it comes to developing our economy. In terms of the retail and institutional investors or foreign investors in our market, in the past, the market was dominated by foreign investors. It tilted a little bit onto recently, where the foreigners are getting back onto our market because they realize that our market valuations are on the low side, and in a year or 2, you can have serious returns on this market. So when it comes to retail, we have about 250,000 retail shareholders on this market, with MTN having more than 100,000 of those shareholders on this market. The key things to do to increase the retail aspect is one, we need to make sure that we take the market to the doorstep of the investor. What I mean by that is that we need to use technology. We should be able to have the potential investor sit in his office and place his orders through his brokers to the market. We've done it a little bit, but we'll go on further to make sure that we can use the current telecommunications technology to be able to do that. And 2, we need to make sure that the investor community in Ghana is educated about both the equities and the bonds market. Most of them shy away from the equity market. They're interested in the fixed income market. So education is also key. And then we're beginning to have institutional investors like the trustees using the pension fund managers to trade on to buy securities on our market. We haven't seen much of that. And that is one area that we're going to concentrate on. How do we get the fund managers of pension funds to participate in the equity market? Once you're able to do that, we're going to get this market, improve upon its activities on this market. So in brief, those are some of the things that we want to be doing as an exchange.
Thank you very
Diana?
much, Mr. Faizi. Well, I'm sure you would you touched on a few of the things that he has mentioned. Do you have anything to add to it in 2 minutes, just in a minute or something? Phil.
Sure. I will just, rather than repeating anything that we've said before, just talk about the direction of travel. If one looks at the S&P 500, more than 70% of the debt raised by companies in the S&P 500 is through bonds, and less than 30% is through the bank market. You know, and the bank market is used for revolving loans, which are the tenors that the banks like, and the bond market can do much longer dated tenors. I think we know that's the direction of travel. I think when it comes to a lot of the themes and discussion points that we've touched upon today, whether that's how we get retail involvement and how we develop financial education in Ghana, whether it's addressing the currency of investments that we make, or the need to create collective investment schemes to broaden the demand for Ghanaian assets. I think the starting point is a clear one, which is we need corporates to list their debt. And the best place to start is with government-owned companies, and to require them to do that and to fulfill all of the financial disciplines that come with that.
Okay, thank you.
Thank you.
Madam Elsie, this question goes to you. In line with the strategic trust of the government to address socioeconomic needs of Ghanaians, how can we make the capital market more responsive to societal needs, particularly in this time, in the wake of the COVID?
Okay, I would have thought you would have asked Mr. Faizi to answer that question. But let me proffer a guess. I think he's really, Mr. Faizi made a point about expanding access to everyone wherever they are. And he talked about people in their offices and how they could sort of place their orders online and all of that. So that's great, and I think we should definitely work on that. But I think we should make this even more of a household matter, so that every Tom, Dick, and Harry sees the capital market as a necessary part of our financial system, and available to them and accessible to them. Not only for issuers, because you do need the issuers as much as you do need the investors as well. But a small investor sitting somewhere must see opportunities for investment as well. And so we do need to expand on the financial literacy efforts and make sure that everybody is on board. We need a supply side working together with a demand side to make this happen. Obviously, for very small investors, they might be better served through collective investment schemes, for example. And perhaps we need to see how those in existence are working and how we can ensure that they improve even access to the smallest of the investors. But we do need to work on some of the building blocks of an efficient market, and ensuring that we do have the rules in place and the rules working well and being enforced to ensure that there's transparency, there are all sorts of other safeguards in place that would promote investor confidence in the market. But definitely to get a private sector being the engine of growth, as we always say in Ghana, we definitely need to see the corporate sector being more active in the market. And as I said in my earlier remarks, the bank market is not the only market that's available. Banks themselves need to access the capital market. And by banks, I mean the other deposit-taking institutions as well. they need to access the capital markets more to be able to access more medium to longer sources of funding to support their clients. So that we do need a corporate sector to see the capital market as a viable option, either by way of obtaining equity funding or debt funding. So far, it hasn't been the case. It hasn't been the case that they immediately think of it, or even if one were to draw their attention to that option, that they feel that they belong there. And I think we need to do something to change that narrative.
Thank you very much. Mr. Faizi, in Phil's presentation, he sort of described the Ghana's infrastructure financing as an iceberg. And I'd like to know, in your opinion, how can we use the capital market, the opportunities on the capital market, to increase participation for private sector in order to bridge this gap?
If I heard you right, you're looking at the gap between capital market and how to develop our infrastructure.
Yes,
is that right?
They'll use the opportunity.
Okay.
Use the opportunities on the capital
that's
market.
That's been very key on the agenda for our market. And one of the key areas that we are looking at is, I don't know whether Phil talked about it, but we have Ghana Infrastructure Fund in Ghana. We've had discussions. They're looking out for how to utilize the bond market in Ghana, for instance, to raise capital, as well as going offshore to also raise capital. So that's one way of doing it. Then the government itself can come direct onto this market and raise a long-term capital. And it has been proving over the past 5 years since we set up the bond market that bond issues can be successful. Large quantities of funds can be raised over a very long period. When you look at the yield curve we have in Ghana now, the benchmarks have been set by government. It goes all the way to 20 years. So we have room to be able to do 15, 20 years, 10 years bonds that can be used for infrastructure. So that is what we need to do. And from the experience of, and therefore, government can easily capitalize on that and raise long-term funding in order to be able to fund infrastructure. At the same time, I heard LC or Phil talk about the corporates. The corporate bonds sector is one area that we are going to emphasize and place our focus on, where we can get many of these companies to be able to also use the market. But generally speaking, we have created the infrastructure, we have created the rules, we have created the platform to be able to do successful long-term capital raising for infrastructure in Ghana, and can be done. It just takes the will of the government and also the entities involved. Of course, government will also have to look at this debt issues and all that before they can even issue more bonds. But we can't have infrastructure bonds being issued in Ghana. And we can have very specific ones tied to projects being issued. Dinah, I'm done.
Thank you very much. Phil, would you like? I'm here. Hello.
Yeah.
So would you like to
invite me into
something
this? I agree with everything that's just been said. I just think, though, that it's important to create the vehicles and to allow all investors to be able to invest in those. And I think the risks associated with these vehicles are much higher when they're smaller, less diversified, less liquid. And the risks, reduce substantially as these vehicles get larger, have more of a track record, and so forth. So, to the extent the government or government entities can support these types of vehicles. It's at the start. Thereafter, you know, the retail and the institutional market, you know, should be sufficient to support those investments.
Thank you. I think our session is running out, so I'd like Madam Elsie, Mrs. Awaji, if you were there, to just give us your thoughts on how women own. In your presentation, you mentioned the SMEs, how to encourage them to grow. I'd like to know whether you have any opinion how women-owned businesses can be supported to grow.
Thank you very much,
SMEs.
Yes. So, like I said in the beginning, access to finance is a big, it's a big policy area for the work of the Bank of Ghana, and throughout regulatory functions, we keep this objective really in view. And what we try to do is to regulate and supervise the licensed financial institutions under REMIT to ensure that they're stable and sound and resilient enough to be able to continue to provide access. And so strong capital, for example, and strong governance and management of these financial institutions would help to ensure that they are able to remain open for business and to provide financial services to all economic actors, including women, small businesses and women. Women-owned businesses form about more than half of the small and medium-sized businesses we have. And therefore, by ensuring that these financial institutions are situated well enough to provide financial access, we would hope that women would be covered. That's not all. We do have in place electronic tools, reporting tools that allow us to understand the data on a disaggregated basis. So we're now able to find out, for example, when it comes to access to mobile money services, access to loans and other credit facilities, access to deposit accounts, how much of these are owned by women, how much of access is being provided to women, for example. And so we believe that's a very important step forward, because that gives us the evidence based on which to make more granular policies going forward. We do know in our engagement with the banks that a number of them now have very specific products and services in place aimed at supporting women businesses. Some of these are funded by donor agencies, but some of them are funded internally as well. And so the banks are increasingly beginning to see that women-owned businesses, for example, or women entrepreneurs are a viable constituency in themselves, a viable segment of the business community, which they need to court and provide not only financial services too, but also to provide technical services that help them to manage and grow their businesses. And so we support that, and we work very closely with these banks and SDIs to better understand what they have in place to support such minority groups. And when I say minority, in terms of the fact that there's a gender bias in terms of access to finance towards men, and women lag behind access to finance. And so we see women as a minority in terms of the range of customers that have access to financial services. And that's something that we're committed to correcting.
Thank you very much. Thank you very much. Ladies and gentlemen, as I said from the beginning, if you can post your Q&A, the questions in the Q&A box, we will take it in a short time. I'd like to take this opportunity to thank my—
if you don't mind, let me add to what Madam Elsie said. At the stock exchange, we created what we call the Ghana Alternative Framework.
2 minutes.
Can you hear me?
Yes, we can hear you. Okay? 2 minutes.
What I'm saying is that in addition to bank financing, we have introduced at the exchange what we call the Ghana Alternative Market, called GATS. minimal requirements. For example, Samba, so just with us in the board meeting, where they can use the gas to raise capital. The requirements are such that we even provide incentives like, let's say, for support fund, where you can take funding from us to pay for advisory work. At the same time, we have also underwriting, which also for the minimum amount you want to raise. And we have had 5 companies coming on board, and we encourage the women to also utilize this market and raise long-term capital instead of the short-term capital.
Thank you. Thank you very much. Yes. Ladies and gentlemen, I'd like to take this opportunity to thank my panelists for the expert manner with which they answer the questions. We'll take the Q&A session after the next round of discussions, which will come up. May I invite my colleague moderator, Edmond Omani Menu, to take over proceedings. Edmond.
Thank you very much, Mrs. O'Kine. It's been a smooth sail with you so far. And I must say, you leave big shoes for me to fill. So I think so far we've had a forward-looking conversation. We've touched on issues like how to improve our corporate bond market. Phil mentioned that if you look at our debt market, there is a saturation of Government of Ghana instruments as compared to corporate bond instruments. We've also looked at steps that we can actualize Ghana beyond aid, using the capital market as a vehicle, or the role of the capital market and actualizing that Ghana beyond aid dream. But I think the conversation will be more complete if we begin to identify where the capital market currently is, and then we find we have a forward-looking approach to the way we want to find opportunities in the current environment. So Ghana recorded its first COVID-19 case 12th March 2020. We've seen market shift since that. We closed 2019 with inflation at 7.9. We started the year January through to March. Inflation was at 7.8. So 7.8 for January, 7.8 for February, 7.8 for March. In April, after we recorded our first COVID-19 case, inflation was recorded at 10.6%. And the highest inflation figure we've had this year was recorded in the month of July, 11.4. For the month of August, we've seen inflation ease down to 10.6%. If you look at the yield curve over the period, you understand that the yield curve has dropped significantly. The monetary policy rate has been eased over the period by 150 basis points from 16% to 14.5%. Half year in July, when the Minister of Finance came to read the reviewed budget, we understand that our 2020 GDP target has been reduced from 6.8% to 0.9%. Now, it's easy for anybody on the capital market to begin to identify the negative impact of COVID-19 on our market, but I believe it's important that we begin to identify where the positive takes are, where the opportunities are at, and that is where the next conversation is going to focus on. So we're going to look at, of course, COVID-19 has had some negative impact on the economy. However, where are the opportunities? Where are the positive opportunities? Which opportunities are presented for not just market players, for retail investors, for institutional investors, for issuers who are looking to come onto the market? And I'll throw this question to all the panelists, but I'll start with Mr. Williams Olowojoba. Williams, you have been on the market for some time now. You have vast experience in investment management and securities trading. COVID-19 has changed the way we do business. There's some positive takes from there, but given the positive advantages or the positive factors that COVID-19 has brought into activities in the capital market space, what do you think the opportunities are? And I'm looking at two things. How can we develop the market? How can we also improve business development in this capital market space? Sorry, given what COVID-19 or the impact COVID-19 has had on the capital market. Over to you, Williams. Thank you.
Thank you very much, Edmond, for that question. For us as a market player, when the COVID-19 set in, we know that there was lockdown and then everybody has to work from home. So one of the things that we did as a company was that we had to provide services for all our clients, either investment management clients, securities trading clients, via technology. We're able to connect straight with the terminal that we're trading with, and then we're able to mobilize mobilize investment from our clients and then provide them services via technology. So one of the things that I believe COVID-19 has taught us and has brought like a new normal for us going forward is to be able to drive our business with technology. Clients are able to reach you via their mobile phone. Clients are able to access their, say, their investment statement via their mobile phone. So they're able to arrange meetings. Sometimes instead of you going out there in the streets, you're able to call a Zoom meeting, you're able to use your Microsoft Teams to hold a meeting. So all these are able to cut down your cost, as it were, and they're also able to time travel, the time you will need to travel from wherever you are to go and meet your clients. You're able to cut all that down by using technology. In the area of where I see opportunities, one of the things we know is that during this COVID-19, a lot of businesses have suffered, and then they need to get back on their feet. And so how will they get back on their feet? We have talked so much about companies needing financing, being able to access financing. SMEs are crying out, they need money to be able to go around their business. And one of the things I see that will be very, very helpful now, like we've said earlier, is to be able to, as market players, to be able to provide that opportunity for SMEs that need working capital, to be able to reach those people that have, or let me say the investors that are able to invest in some of these companies. So that is where we as market players find ourselves. I think one of the things that will help in this market that we are is in the area of collaborating. We have a lot of players in the market. You probably have connection with someone that has money. I probably have a client that is looking for money. So if we're able to come together as market players, either broker dealers, investment managers, and we see that we're able to collaborate and provide solutions for all these companies. If somebody is floating, for instance, a mutual fund, we're able to sell it as players in the market. I see that's an opportunity. And it to be specific, if we look at some of the areas that businesses that probably are looking for finance, agribusiness is one area that I think is like a hot thing right now. There are people that are looking for opportunities to be able to get money and grow their business. They have products that they need to get out there. They probably need machines, they need tools to be able to cultivate their farmland. So how do we help these companies to do that? Then for schools also, we know most of our kids are at home right now. And most schools, what we've discovered is not every school has a virtual an infrastructure to be able to provide virtual classes for their students. So how do we as a market, how do we as market players be able to help these schools to raise financing and provide education via technology to these pupils? One of the things I've seen over, if you look at most of the videos you see on YouTube, we only see maybe foreign videos that people come on the videos and then they present some form of education. When are we going to be seeing the ones that are, let me say, home developed and the ones that are able to meet our kind of curriculum back here in Ghana? Then I think I'll touch also on the area of transport. When we have people that have grown things, let's say farmers that have developed that have cultivated their farms, and then they need to be able to bring their crop from the farm to the cities. How are we able to provide some form of support to be able to bring those products to the main cities? I'll close by talking about the healthcare. Formerly, we know people are able to travel out of, let's say, Ghana, go to the US, go to Europe to seek medical attention. But how are we able to provide financing for hospitals to probably expand their operations to cover some other areas that they are probably not doing at this time? So I think these are areas that I see opportunities in this market. Thank you very much.
Thank you very much, Williams. Thank you for your take on that in your presentation. So 3 things I take from what you're saying is that there's an opportunity for the market to utilize a digital strategy for the entire capital market. The second thing is that market players have the opportunity to raise capital for various sectors in the economy. You spoke about transportation, agribusiness, healthcare, and education. But one thing you also said was that there's a need for that collaboration among market players, collaboration and that synergy on transactions in this capital raising opportunity. Thank you very much for that. My next question will go to Mr. Ekwe-Afeadze. So, Mr. Ekwe-Afeadze, you're on the market, and we've seen the Ghana Stock Exchange Composite Index really dropped to about a negative 18% year to date. I believe a lot of investors would want to ask themselves the question, where are the opportunities in there? I mean, after COVID-19, we've seen the market take a hit or an impact, but really, where are the opportunities for issuers who want to get onto that stock market, for investors, both institutional, both retail, both foreign, and both local, to get onto that market? Over to you, Mr. Afeadze.
Thank you so much. This is the time to buy. For the investors out there, this is the time to buy shares. You don't buy shares when everybody's buying. You should always have the contrarian view. If you have the contrarian view, you always make good returns. What do I mean by that? You find that there's a lot of, or many investors are selling. So there's the selling pressure. So prices are coming down, which gets reflected in the index. That is why the index is negative 18. But when you look at the other side of the story, we've had more transactions this year from January to August than last year. People get surprised. We've done 272 million cedis worth of shares traded versus 153 million traded last year. The volume 278 million compared to 153. So you realize that there are more transactions, although it's coming from not too many of the companies. But when you talk to the advisors, the brokers, they'll tell you that there are many opportunities now for those who have long-term funds, emphasis on long-term, medium, long-term. You don't invest in equities with very short-term funds. So this is the time to buy equities if you have that medium to long-term view. And then also, like I said, we created a bond market. You can easily buy any type of bond on the market at any time through any of the licensed dealers. So the opportunity for various types of investments on this market as we speak. So the pandemic has had an impact on the index, the index falling, but we've seen some stability in the past few weeks. So prices are not moving downwards like the way it used to. Also, courtesy the introduction of some price movement rules that we introduced not long ago on this market. So those are my comments for now.
Thank you very much, Mr. Afeadze. We'll jump quickly to questions from the Q&A section. And let me just say this briefly, that we have a lot of questions coming in from all attendees, and we can only make time to take just a few. So I'll start with Mrs. Awadi, if she's on the call. There's a question about financial inclusion and financial literacy as a tool to develop the capital market. And this attendee is asking the role of the BOG in all of that. What is BOG's plan so far as improving financial literacy and financial inclusion is concerned? They are indicators or factors to enhance and enrich our capital market. So what's the BOG's strategy or plan around that? Hello? Okay, so if Mrs. Awadi is not available for that call, okay, I'll move on to the next question since she's unavailable at the moment. Back to you, Mr. Afeadze. There's a question on derivatives. Where is Ghana at? Where's the Ghana Stock Exchange at so far as derivatives are concerned? And what are the limitations we are currently faced? And where are the opportunities? So what's our outlook on derivatives? Should we be seeing anything, a lot of activity so far as that instrument is concerned on the exchange?
Currently, we don't have the derivatives on our market as such. In the past, until the new act, that's the Securities Industry Act, the securities law was amended, we didn't have derivatives as part of the instruments that we could create. We have plans within the next year or two to introduce derivatives on this market. And we'll make sure that we do a lot of education so that people will understand. We live in an environment where people do not even understand common shares, or ordinary shares. So when you jump into derivatives, then you must be careful and also target it properly at those knowledgeable investors. So we shall surely introduce derivatives to broaden the products that we have on this the market. So, and that is one of the key things in our strategic plan. How do we diversify the products on the market? So derivatives will come on the market soon.
Thank you very much, Mr. Afezi. I see a lot of questions directed to you, but I'll let you take a glass of water while I engage Mr. Phil Southwell. So there's a question for infrastructure finance, and really targeted at Mr. Phil Southwell. The question is, how can foreign investors finance in infrastructure projects in Ghana, but in local currency? What are the steps for that? And what's the technical advice around foreign investors investing in infrastructure projects in Ghana, not in a foreign currency, but in a local currency? In the case of Ghana, not in dollars, but in Ghana cedi.
Am I the one to answer that question, Eko? Can you hear me?
No, please, Mr. Fezi. That question was directed to that question was directed to Mr. Phil Southwell. But you're free to take up that question if you don't mind.
Okay. No, if it's available, you should take it. But the point is that if you want to do a cedi bond in Ghana, then you must go through the procedures and also meet the requirements. One, you cannot float shares or bonds to the public without registering as a public limited liability company. So to do a bond issue to the public, you must first of all become a public limited liability company. Then you must also get approval from the Securities and Exchange Commission in order to do a public offer. You must meet the normal requirements of disclosure in terms of who are the directors, your financials, how much you want to raise, etc. We've had about 10 companies doing corporate bonds on this market. So you can, as a foreign entity, come to Ghana, register your company, and float bonds on the market. So that is possible.
Thank you very much, Mr. Fezi. My next question will go to Mr. Williams Olowojuba. So Williams, we saw Phil's presentation in which he showed the asset allocations for pension funds in Ghana, and even went further to show that of the entire OECD. My question is really, what are the strategic or tactful steps that we can use to really introduce infrastructure financing as a vehicle to pension funds here in Ghana? If you look at our current pension asset class, you see the government of Ghana securities, you see the money market asset allocation, and a couple of asset allocations. But where are the opportunities for pension funds to invest in such infrastructure instruments? Over to you, sir.
All right. Thank you very much, Edmond, for that question. What I see is that in terms of floating an infrastructure fund, like Mr. Afezi said, there's already a Ghana Infrastructure Investment Fund, which is in Ghana. But we as market players, we probably need to collaborate with this agency of government and see how we can probably bring an instrument to the market. And then when we're bringing such instrument to the market, we need to make sure that it meets the investment criteria that the NPRA probably have to approve for investment, for pension funds to invest in. We have to create a structure that will allow an average investor to have that comfort that I'm putting my money in this kind of investment that has a long tenure, and I'm sure that the investor, the infrastructure that is being funded is something that's going to be managed, and it's something that's going to be overseen by such individuals that are probably not that will not take those money into some other uses. What I'm trying to say is that let's create an instrument that is investing in some income yielding infrastructure. For instance, are we going to probably finance a road that there's a toll plaza, and then whatever monies that you're raising from that toll, you're going to use to manage and then take care of that road? Are we looking at setting up schools that definitely students will come to that school and then pay their school fees? Are we looking at transport that is well managed? And then power infrastructure in Ghana is relatively good. But if we're going to be moving from the coal and moving from the gas and moving to renewable energy, so we look at such companies, private companies that need finance. So we put such capital in these companies, and we know that definitely they are going to generate enough cash flow to repay the investors that have invested in this instrument. So I'm sure that with all stakeholders in place, the NPRA, the market players, we're sure that we can look at putting together an instrument that investors will be comfortable to invest in. Thank you.
Thank you very much, Williams. My next question is for Mr. Fedi. Investor education, there's a question on investor education. Should investor education be the role of the regulator, in this case the GSE, or for market players? We understand that investor education is critical for developing our capital market. Is it an issue of having to ride at the back of the regulator or ride at the back of market players? Over to you, Mr. Fedi.
I think it needs to be a collective thing where both the regulators and brokers or the license dealing members together would do the education. As an exchange, for 30 years now, we've taken up education, where we've been educating potential investors and various groups throughout the whole country. And we're even going to step it up a lot more into the future. So it has to be a combined effort by the regulators and the brokers. And even you can even bring in insured finance, where we can broaden it to financial literacy in total. It's very important that we educate Ghanaians generally on financial literacy so that we do not see some of the things we've seen in the past few years happening.
Thank you very much, Mr. Fedi. I'll take your last comment, and I'll start with you, Mr. Oluwojuba. Developing our capital market for sustainable economic growth. 30 seconds. Can we have your final comments, please?
All right. I think from all the presentations we have, we've known that, okay, aside going to banks for financing, the capital markets is an area that people can look at. So let's see how we can, as market players, go out there and see how to support businesses that need our services. So I'm sure that with this, we can also contribute to the growth of the economy in Ghana. Thank you.
Thank you very much, Mr. Oluwojuba. Over to you, Mr. Fedi.
Let me say that the stock exchange has laid a very solid foundation for growth. And we believe that this is the time to promote more listings and also promote more investments. We need to get Ghanaian companies, local companies, to raise long-term capital, either by way of debt or equity, to expand. And that's the only way we can impact the economy. That's the only contribution that the exchange can make towards the development of this economy, facilitating the raising of long-term capital and at the same time providing liquidity for the market.
Thank you very much, Mr. Fedi. I'll hand over to our host for the day, Ms. Nena Nwoye. Over to you, Nena.
Thank you very much, Edmund. It's been a very interesting afternoon. It almost seemed like people did not want to get off this call, but we're trying to be very judicious with time, even though we have gone over the time that we had allocated to this, but it's clear that this is a conversation that we must keep going on. I'd like to quickly thank everyone who joined this call today. We hope it's been as insightful for you as it has been for us. I'd like to especially thank the moderators, Mrs. Okai, as well as Edmond, for your time and your commitment towards this project. Thank you to our panelists for taking out time from your busy schedules. As you guys would notice, Madam DG had to jump onto this call from another call that she was on today, and it's just a testament to her commitment to the work that she had said she would do with us. Mr. Fedzi, you continue to be very supportive in the work that you do for the exchange as well as broker dealers. Anytime we call, you're there for us. We do not take your participation in this program lightly today at all. Thank you so much, Phil. You always bring a different perspective to the table, and we appreciate you for that. Thank you also, Williams, for your contributions to this discussion. They have remained invaluable. It really has been my honor today to host you on the Chapel Hill Denham platform. I would also like to use this opportunity to thank two people, our director, Mr. Nathan Minter, and the first deputy governor, Mr. Maxwell Opoku-Afari, whose roles in making today a success cannot go unnoticed. Lastly, I would like to remind us all that we still live in COVID times, and we must continue to live with caution and care for ourselves and everyone. From all of us at Chapel Hill Denham, we'd like to say keep safe, stay well, invest in Ghana. That's the key message that we hear today, invest in Ghana. And we can't build this market expecting other people to come and invest in it. So invest in Ghana. I wish that you all continue to stay in good health. God bless you all, and God bless Ghana. Thank you very much, and have a good rest of your day. Take care.